let's talk about support and resistance. It's pretty much the foundation of all technical trading, right? But there's a huge secret that most traders completely miss, and it leads to some really costly mistakes. So in this explainer, we're going to give you a simple framework that'll turn those confusing charts into a crystal clear roadmap for your trading. Hey, does this look a little too familiar? You're staring at your screen and it's just this spider web of lines. It's so dense you have no idea where you should be buying or selling. This isn't really analysis, it's just noise. And all that noise leads to a very specific, very frustrating problem. It's a classic case of analysis paralysis. When your chart is a total mess, your mind becomes a mess. And trying to make a confident trade in that state, it's pretty much impossible. You just end up frozen, not able to pull the trigger. But don't worry, there is a super simple way to fix this. We're about to break down a method to get you ultimate clarity on your charts, and we're going to start by tackling the single biggest mistake that most traders make. So here's the most crucial point. The goal is not to mark every single little wiggle in the market. The goal is to identify the levels that actually matter. And the very first step toward getting that clarity is understanding that less is almost always more.
So, how do we actually find these levels that matter? Well, it all starts with our first secret, a really simple 3-step method that will completely change how you see the market and finally give your charts that clarity you've been looking for.
Okay, here's the whole process in one shot. It's super straightforward. First, you're going to zoom way out to see the big picture. Second, you only draw the levels that are screamingly obvious. And third, you just adjust those lines a tiny bit to get the most price interaction. Let's break down each one. First things first, you have to zoom out. Zoom way out, like 5 to 10 clicks. Why? Because it forces you to completely ignore all the minor, insignificant market chatter. All of a sudden, you'll start to see the real market structure, the major peaks and valleys where control really shifted in a big way. Next up, you're going to draw what just jumps out at you. And I have a really simple rule for this. If you have to squint to see if it's a level, it doesn't count. It's got to be obvious. Then, and this part is key, you slightly adjust that line up or down. The whole goal is to get the maximum number of times the price touched or reacted to it. Think of it more like a zone of value, not just one exact price. Okay, so you've got your clean levels drawn on your chart. That's a huge step forward. But now for the million-dollar question. How do you know if the price is actually going to respect that level and reverse? And that brings us to our second secret. How can we possibly anticipate when a level is going to be strong enough to just stop price dead in its tracks and send it flying the other way? Well, the answer isn't in the level itself. It's all about how the price approaches that level. What you're looking for is something called a power move. This is a strong, high-momentum move straight into your level. You'll see these big, decisive candles where the price just barrels forward with almost no hesitation. Now, you'd think that's a sign of incredible strength, but it's actually a sign of exhaustion and a huge clue that a reversal might be coming. The psychology behind why this works is fascinating. A power move is basically a track. All the breakout traders see that strong momentum and they jump on board, right? They all put their stop-loss orders just below. So when that breakout fails and reverses, it triggers that whole cluster of stops, which just adds massive fuel to the fire for the move in the opposite direction. And here's another layer to this. If the price hasn't been to a certain level in a really long time, we're talking months or maybe even a year, that level becomes way more significant. And why is that? Because now it's visible on the higher time frame charts, like the weekly or the monthly, and that gets the attention of institutional traders and the big money. This usually leads to a much stronger reaction when the price finally gets back there. So we know exactly what to look for when a level is likely to hold and cause a reversal. But what about the other side of the coin? How do we spot when a level is getting weak and it's actually about to break? Let's dive into our third and final secret. The signs for a breakout are actually just as clear as the signs for a reversal, but you have to know what to look for. And here's the trick. It's the complete and total opposite of a power move. This time you're looking for a buildup. This happens when the price moves towards a level and then just stalls out. It grinds sideways, coiling up like a spring right against that barrier. It's not being rejected, it's being accepted. And this consolidation is a classic sign that pressure is building up for an explosive breakout. And this right here perfectly illustrates the core difference. A power move is a sprint into the level, and that signals a rejection. A buildup is a slow crawl at the level, and that signals that it's gathering strength to push through. One is a rejection, the other is pressure building. So, what does this buildup actually look like on a chart? Well, you'll often see classic patterns, like an ascending triangle where buyers are making higher lows right up against a resistance level. Or you'll see a descending triangle where sellers are making lower highs into a support level. Sometimes you'll even see a moving average creep up from underneath, acting like a floor and just squeezing the price against that level, getting it ready to pop.
All right, let's put this all together by first cleaning up your charts and then learning how to read the language of price as it approaches these key levels. You've just given yourself a powerful, powerful new edge in the markets.
And here is your simple cheat sheet to make it unforgettable. If you see a power move slamming into a level, that's a sign of a strong rejection, and the level will probably hold. If you see a buildup at a level, that's a sign of pressure building, and the level will probably break. It really is that clear.
What all of this really means is that you can finally move beyond just guessing. Instead of just hoping a level holds or breaks, you can now read the story the chart is telling you and actually anticipate the market's next move with way more confidence.
You now have a framework to see the market with incredible clarity. The noise is gone, the signals are clear. So the only question left is, the next time you look at a chart, what are you going to do with your new edge?